Welcome everybody to today's episode. I am Oliver. We are here to continue what we've been doing. We are here to study. We are here to learn. We are here to make money. So, what we are going to start with is I think I have my analysis right here. So what I'm looking for, right? What I'm looking for to buy and what I'm looking for to sell and everything. This is where we'll be building towards, right? This is what we are going to build towards. But we have to start from somewhere. We have to start from somewhere. This is why we are starting from here. Okay. So we are on a blank chart. This is when we come into the market. You don't start on the 15 minutes. We don't start on the 15 minutes. I think I have the trading plan book here. Give me a minute. I will find it. Okay, so I found it. So start from what we have is we have higher time frame order flow, right? We have, I use acronyms, so higher time frame order flow. So this is higher time frame order flow. Then we have lower time frame execution. So everything that we are going to do, we are going to build from here, and you have to keep your mind, like you have to keep your eyes on these notes, these small notes. This is what is going to make you understand. This is going to give you a kind of understanding so that you won't get lost, especially if you are going through this for the first time. So higher time frame order flow, lower time frame execution. Higher time frame order flow, lower time frame execution. What is higher time frame? What is lower time frame? Right? What is higher time frame? What is lower time frame? There is no specific time frame that is a higher time frame. Like we don't have any specific time frame that we say that this specific time frame is a higher time frame. It depends. A higher time frame relative to what? So it's if you are trading on a daily, and the daily is when you execute, then maybe your higher time frame might be the monthly time frame or the weekly time frame. But let's say if you're executing on the 15 minutes, if you're executing on the 15 minutes, you will see that your time frames, your higher time frame will be the daily and the 4 hour. If you're executing on the 1 minute and the 5 minutes, you see that the higher time frame might be the 4 hour and the 15 minutes. And just by learning or just by knowing how to structure these time frames together will give you clarity when you come to the market, because it kind of gives you some kind of a map. Now you know where you are going. Let's say you have identified that the 15 minutes is your high time frame, the 5 minutes is your medium time frame, and the 1 minute is your execution time frame. That's where you execute, that's where you place your trades. If that's the case, it means every time you come into the market, you ask yourself, where is the 15 minutes trend, where is the 15 minutes internal structure, where are the M15, because that's the high time frame, where is the 15 minutes structure that I'm trading within, right? Then you go to the 5 minutes, you look for your immediate buyers and you trade, right? Because what you are going to learn is that the medium time frame will switch structure, right, to satisfy the objective of the higher time frame, right? The medium time frame will switch structure to satisfy the objective of the higher time frame. It is the same time the internal structures switching structures to facilitate the pullbacks or the swing structures, right? Well, this is what we are going to learn. If you have multiple videos on that, but we will continue on this as well. So we have the higher time frame order flow, and we have the lower time frame execution. And I've said higher time frame is any time frame that's higher than the lower time frame that you are trading on. So if you are trading on the lower time frame, like on the 1 minute, you are mean 15 minutes is a higher time frame for you. If you are trading on 15 minutes, then it means 4 hours in a day is a higher time frame for you. If you are trading on a daily, 1 hour, 1 month, and 1 week will be ideal higher time frames. If you are trading on, let's say, on the monthly, maybe the daily, the yearly, or the 6 months will be a higher time frame. It depends, right? That's what I'm getting at. It depends. It is the same as the lower time frame. So higher time frame order flow, lower time frame execution. Now, from what I do, my higher time frame is the 4 hour. What I do is that I use the 4 hour. So with this, let's add more notes. So you see that with me, I use the higher time frame equal to 4 hour. Medium time frame equal to 15 minutes or M15, and then lower time frame equal to N1 equal to N5 and N1 sometimes N1. So this is it. What you are going to do is, now you have identified that what you are going to do, now you have identified, you have identified that this is your higher time, this is your time frame that you are going to use, right? The moment you have these time frames that I have a higher time frame that I will be consistent with, every time I come, I'll be looking at this. I have a medium time frame, I have a lower time frame. The moment you have this, you have like, without anything, you are more than like 30% done, right? Just by having a time frame that will be consistent with, So let's say you have this. Now, when you come into the market, you are looking at the 4 hour. What is the 4 hour? Where is the 4 hour structure? What is the 4 hour telling you? Because that's the 4 hour. Yeah, that's the main trend. So the market process, we start with the 4 hour, the higher time frame. What we look for is the narrative. So we are continuing to add more into the notes. So in a higher time frame, what do I say we look for? We look for the narrative. And what is the narrative? The narrative is, are we in a pro trend or are we in a counter trend? What is the story price is telling us? So just looking at this, and one thing too, I'll continue this. One thing I would like to point out is what I'm going to do. There will be times where I will be reading multiple time frames on the same time frame. So I can be reading the higher time frame and the medium time frame, or sometimes the medium time frame or the higher time frame. It doesn't matter. It matters too, but like follow me closely. Maybe I might not be conscious, but follow me closely. So example like this is the daily structure, but I'll read it on the 4 hour. So you can see that we have this 4 hour structures here, right? You moved impulsive, you came to the downside, you moved impulsive, and when I see you moved impulsive, this is pro-trend. The impulsives are the pro-trend, right? So this impulsive move is the pro-trend move. Within the impulsive, that doesn't move straight like the line that I've drawn. Price will move impulsive in a corrective structure, but overall we will follow or we will continue following the structure until we break the middle structure to get a pullback or whatever. But the main structure, that's called the break of the swing structure, will not break. This is what we call the impulsive move. When we are doing these kind of structures, we say we are in the pro-trend. We say we are in the pro-trend, or we are in the continuation move. Right? So when we are trading in line with the main trend, we say we are pro-trend, or we are in the continuation phase, or we are in an impulsive phase. So when price is moving this impulsive move to the outside, when price is moving this is an impulsive phase, this is a continuation phase, because this is the last impulsive move. We have a corrective structure, and the next impulsive move. So this is the narrative. Again, when we look at this, you can see that we have this low to the downside here. Price broke this high, right? We did the low, that's called the break. So we move to the upside, and we started to pull back. When price is pulling back here, this is what we call a counter trend. When price is pulling back here, this is what we call a counter trend. And counter trend, it goes against the direction of the main trend. So it is a pullback. This is a pullback phase. This is a continuation phase. So now, if you over here now, we have identified multiple things. What I will do is I will add more notes. So the narrative that we look for is continuation. Are we in a continuation phase, or we are in the pullback phase? The continuation means pro-trend. We are pro-trend. The counter trend is the pullback. So pro-trend is PT, CT is counter trend. Alright, so this is only on the high time frame. We are, if you saw about the chart in, when you come, let's say you see my chart, and we've seen that we have this maybe zones drawn here, we have these lines here, maybe sometimes with S, with the other sign, sometimes with FR, sometimes with this. You might not understand that any zone, like any tree that you see on it, is kind of unique. It is significant. They are not the same, right? So follow me closely, because now we are building the higher time frame order flow so that we can go to the lower time frame to execute. Higher time frame order flow, lower time frame execution. How do we get to execution? You know how to read the market. You have learned how you read the market. You understand everything. When you see pro-trend, you see pro-trend. When you see counter, you see counter. How do we actually mold this knowledge that we have into a concrete structure that we can modify? That is operable, right? Something that is usable, that can be used consistently, because the knowledge is kind of fragmented. It is not one. So you know a little bit of this, you know a little bit of that. How do you combine this together? This is where this trading plan comes into place. So this is like it gives you a step-by-step process as to how to go about everything. Cool. So lower higher time frame order flow, lower time frame execution. Higher time frame order flow is equal to the narrative, which means what is the story, and the higher time frame I've already identified is there. The higher time frame is the 4 hour. So the higher time frame is the story. What is the story? When we are moving impulsively, we see we are pro-trend or we are in the continuation phase or impulsive phase. When we are moving to the downside, we see when we are moving against the continuation, we see we are counter trend or we are in the pullback phase or we are in the corrective structure or corrective phase. It means we are going against the structure, the main trend. Cool. So on the 4 hour, this is the narrative that we are seeing. Here we can see at the last low that caused this break of structure here. Right, what happened? Price started to pull back and created a low that actually led to a break of the last high, right? Cool. Now I want to point out another thing. So looking at this, we saw that this move here, this move here, and this move here were pretty impulsive. They were really impulsive. Look at this impulsive move. This on the 4 hour, but you can see it was pretty impulsive. So we had this high impulsive move, we came to the downside, and now another large impulsive move to the upside. Wow. When we get something like this, we had another pullback, and someone had impulsive move. Looking at this, we have although we had another continuation phase. Now look at this structure. Can we classify this to be more of an impulsive move like this? No. You can't classify both of them as equal in terms of impulsivity. Yes, in terms of impulsivity, you can see that these ones are kind of impulsive, much more impulsive than the one we just highlighted, this region. Right. So although it's a continuation, it is not so much impulsive. So this is where this is the narrative. This is what part is telling you, right? But are you in the continuation phase or are you in the counter trend phase? Are you in the impulsive phase or are you pulling back? Are you bullish or bearish? So here you can see price is clearly bullish. Price was clearly bullish. Here was the last low. And here is the last high. What happened? We created another high, giving us this last low, right? Because you have this one, you know, created the last low, and boom. The reason we don't classify here to be the high is because it failed to break above this. Here is the high, here is the low. So we are trading within this range. We are trading within this range, right? So until this one will break or until this one will break, everything that is happening within here is kind of our concern, and it doesn't mean anything significantly. We can only classify a break of structure. We can only classify a break of structure. We can only classify a break of structure if we get a break of the highs or the lows, the swing lows or the swing highs. We don't classify a break of the internal as a trenching. Let's say here we have this low here. Excuse me for a minute. Let me point something out. Let's say we have this low here. So let's say we have this low here. This green line, I don't know whether you can see it. I would like to do it manually so that it will be clear. Alright, cool. So let's see, we have this low here. When price created this high, if this high never broke this, if this high that we now have, this high that has happened here, right? If it's never broke this high, right, and it's still within this range, it's still within this white line and the green low, like we wouldn't confirm the trend change. It will still be within this range. This will still be a strong structure, and price will still would have been bullish. Am I clear? So the moment you get a break of the highs or the lows, we adjust. The moment you get a break of the highs or the lows, now we have to look at what happened, what trend changed, what trend changed. How do we go back, and we continue. So we continue the move and we break this high here. Alright, here is the last high. Now we're broken. Cool. So when we break this, where is our last high? Here. Remember, whatever we are doing is we are building the narrative. We are building the narrative. So the moment we break a high and we create a higher high, we confirm that we are in a bullish market structure. It is obvious. The moment we break a high and we create a higher high, it means we are in a bullish market structure. What happened here? We broke this high and we created a higher high. Means we are in a bullish market structure. Where if that's the case, then means here refuses. Here doesn't be the raise again. The last low that was in the range is the low. Is the strong low that we are looking at. That's the base of the range. That we don't expect price to break. Right? And it will be this. In the last low. Afterwards, I will teach you a technique as to how the techniques to identify the lows. I will teach you that afterwards. So now we are mapping. This can be identified, or we can identify here as a boss. And what does a boss mean? Boss means a break of structure. So you open another column for the structures, and boss is equal to break of strong structure, break of strong structure. We see IBOS, that's for now, and we see CHoCH. This will be our structure, the structure that we are going to build. But for now, we will build it, we will continue to build it. So just keep it at this, keep it at here. We have the high time frame narrative. Now we can classify that the structure was bullish. This was our weak structure. Here was our weak structure. Our strong structure. Here was our weak structure. And since we build this to create this high, here became the strong structure. Now we weren't expecting here to break. I wasn't expecting here to break. I was expecting price to tap into our regions from here so that we continue the move. But it didn't happen. What happened is price broke this low, so price came to the downside. We broke this low and we started to pull back. The strong structure that we will continue with that one too as well. We have a strong structure and a weak structure. So this is the narrative. We are still building the narrative. So the strong structure that we weren't expecting price to break has got broken. If that happens, the high or the structure that caused the break becomes the strong structure. It is mechanical. Like if this and this happens, then this and this we now this and now see ABI. No, we don't do anything like that. It is mechanical. If A, B, C happens, then C, D, E will go. It is simple as that. So I remember a time where I was like, the M15 structure used to confuse me because sometimes you see that, oh, although this, when we build the M15 structure, we were supposed to get the 4 hour swing pullback. But you see that sometimes I will identify my M15 swing range and we break it. But when I come to the 4 hour, it will be like we are still in the M15, we are still in the 4 hour internal pullback. Like the swing pullback hasn't started, then I'll be thrown off. Like, so I used to happen every day until that I feel like, no. We were having a conversation and he was like, so, or no, like, he didn't understand how I was managing to be effective on that. Because, yeah, it was hard. It was hard. So he was like, no, I should do like, the M15 swing range will be the 4 hour internal structure, will be the M15 swing range. So let's see if here was supposed to be the 4 hour internal structure and here is the 4 hour internal low. Then automatically when I go to the 15 minutes, this one will be my swing range, my M15 swing range. And although this is not the case because here this will be the M15 internal. So the 4 hour internal, which means this one will be the swing range for the M15 or the medium time frame. And then this one will be the medium time frame block of structure. And this one will be the weak and this one will be the strong. So that's why it's coming here. I would expect this one to be like I'm expecting this range. So it is like fractal. But the moment he gave me that kind of framework, everything shifted. So I mean, when I come to the 15 minutes, I know that, oh, okay, this is the 15 minutes swing range, this is the 15 minutes, swing range, and cool. Believe that this is the range that I'm trading within. Okay, if I'm trading within the range, I'm pro-trend. If I'm trading against the range, I'm counter. If, this is the M15 phase. So we'll continue with this one as well. Maybe today or later, we will continue with the phases. Right, we will continue with the phases. But if this is everything is this, if you have a mechanical framework, it saves you from a whole lot of stress, bro. Like a whole lot. It makes the thing simple because it releases much of the decisions from you. Now it becomes a set of rules. Are you willing to follow it? That would be the thing. That would be the next question. Are you willing to follow the rules? If you are willing to follow the rules, perfect. That will if you are willing to follow the rules, cool. I don't know how this is not coming, but let me see. But this is just the beginning of rebuilding or mapping even the distance, like going through the mapping process. So we are just on the narrative because aside the narrative, we will continue with we map the swing ranges, we map the internal ranges, we map the Okay, Abba. So yeah, the strong structure now, because it has led to a break of a strong structure. Now this is an interesting transaction because when this happens, we got a break right to the upside. We got a break to the upside, confirming this to be a bullish structure. Because in a bullish range, the strong structures are the lows and the weak structures are the highs. In the bearish structure, the strong structures are the highs and the weak structures are the low. And now we are seeing that this is a strong structure because it led to a break. If that's the case, it means this becomes the weak structure and this switches from bullish to bearish. Right? Now it switches from bullish structure to bearish. Simple. So now we are in a bearish range. You can see that the higher time frame is bearish. Simple. The higher time frame is bearish. How do we identify that the higher time frame is bearish? How do we even know? Because we don't. There's no way we know that this is bullish. We have a set of mechanical rules in place that tells us that if this and this happens, then it means it is bullish. And it has happened. What happened was, here was the boss. And now here has become the boss. Right? And we got in the break. We are continuing the move. So this is a strong structure. This is a structure we don't expect price to do it, to break. This is a structure we don't expect price to break. So on the higher time frame, now this is our current swing range. This is our strong swing structure, and this is our weak swing structure. This low here is our weak swing structure. So here is our weak swing structure, and here is our strong swing structure. Swing structures are the borderline. These are the structures that create the range. So you can see that this will be a swing structure because it created a range, and this will be a swing structure because they created a range. Here and here will be a swing structure because they created a range. I'm giving you the definitions and I'm giving you the understanding, the framework, so that whenever you come into the market, whenever you meet any candlestick that moves in a candlestick way, you can be able to identify where the market is going, and you can be able to predict the market and make money, because each price action is unique. Each price action that you come across, you will never get the same price action twice. You only do once. Here this is real, right? So you have to have an understanding as to our mental framework as to how we go about this. If you know how you go about this, cool. Like if you know like this and this is how we go about this, whenever you meet price action, you are going about it the same way, and consistent actions will lead you to consistent results. So now we have mapped our current swing range. You say this is our current swing range. This is a strong swing structure. This is a weak swing structure. Whenever price will pull back, we don't expect price to break this because this is a strong structure. When price breaks this, then it means we have switched from bearish to bullish. It is as simple as that. Good. So now here is our current internal range. So you have the eyeballs. The eyeballs is what we call the internal block of internal structure. Internal block of structure. Internal break of structure. So alright, so these eyeballs, how do we we identify our internal structure? How do we identify our internal structure? This is a good question, right? Or not? So somebody might be thinking, okay, if I want to identify here to be my strong structure, can I, because this is also a structure that's called the range, can I use this as my strong structure? You can. Trading is the ultimate freedom of expression. You can do whatever you want, whatever. That's the reason why you need a rule. You need rules to modify your behavior. So you need rules to modify behavior because trading is boundless, like boundaryless. You can do whatever you want. You can identify where to be a swing, and you can identify this to be internal. But it's up to you. You can do what you want. But when we look at this range like this and classify here to be our swing and classify here to be our internal, you see how kind of it gives us much of structures to work with. Now, if this is the pro trend, then you look for what? You will look for the counter trend. And one thing that why are we really looking for the counter trend is, let me add it. Okay, I don't know. I'll add it here. Is that after a break of structure, we expect a pullback. After a break of structure, we expect a pullback. So where was our strong low? This low here is our strong low. This low here was our strong low, here was our strong structure. And now we are broken the strong low. After a break of a swing structure, we will expect a swing pullback. Here it is after a break of any structure. So it can be a swing structure, it can be internal structure, or it can be fractal structure. So the CHoCH is what we call a break of fractal structure. So it can be internal break of structure, it can be fractal structure break, it can be swing structural break. We will expect a pullback. Now look at this. When you get a break of this structure, what are you expecting? We are expecting a swing pullback because you've gotten a swing pullback. When you get an internal break of structure, you will expect an internal pullback. When we get a swing pullback, we expect a swing. When we get a swing break of structure, we will expect a swing pullback. When we get an internal break of structure, we will expect an internal pullback. So now on the mapping process, we are still on the 4 hour. We want to identify the higher time frame of that flow so that we can execute on the lower time frame. How do we identify the higher time frame of that flow? We start by identifying the structure. We start by identifying the structure. Which is the narrative. So we start by identifying the narrative. And the narrative is the structure, obviously the trend. Are we in a bullish trend? If it's a bullish trend, okay, so now you're in a bullish trend. If you're a bullish trender, are we trading in a bullish trend? Are we trading with the bullish trend, or we are trading against the bullish trend? If you are in the bearish trend, are we trading with the bearish trend, or we are trading against the bearish trend? If we are trading against the bearish trend, it means we are trading in the counter trend, a pullback phase. If you are trading with the trend, it means we are trading in a continuation phase. As we are trading in a continuation phase. So here we've broken a structure, we've identified that we are bearish. Now we are expecting a swing pullback. How do we identify that this is our swing pullback? How do we identify that here is our swing pullback? What gives us the confirmation is when we get an internal break. When we get an internal break of structure, we classify that we will confirm that we've gotten a swing pullback. The moment you get an internal break, just confirm that you are in a swing pullback. Simple. And how do we, before the earliest confirmation that we get is the CHoCH. When you get a fractal break of structure, so a fractal break of structure, so when you get a fractal break of structure, and when you get a fractal break of structure, that's the earliest confirmation that we can expect the swing pullback when we get a swing break of structure. But it is not the truest confirmation. I'm just pointing it out. It is not the truest confirmation because the internal structure is the main confirmation. So looking at this is the swing structure, right? This is the swing structure. Within the swing structure here, we have these structures that satisfy the objective of the swing structure. In the beginning of the video, I pointed out that we have the internal structure, or we have the M15, the medium time frame that switches trend to facilitate the objective of the higher time frame, and we have the internal structures switching trend to facilitate the objective of the swing structure, right? Now here is our swing structure. And you can see that within the swing structure we have the pullback, we have the pro-trend, or impulsive phase, a corrective phase, an impulsive phase, corrective phase, impulsive phase, corrective phase, and the last impulsive phase. So now we are in the corrective phase. You have guessed it. We are in the corrective phase. Just by looking at this, just by looking at these lines, right? Let's see, let me use different color and see if I don't know why the color is not changing. I don't know how the color is not changing, but just by looking at this, you can see here was the last high. Here's the last high. That caused this break. Here's the last high. That caused this break. And we started to pull back. So if that's the case, and the objective, the internal structures switches trend to facilitate the objective of the swing structure, then we can classify here to be our swings. We can classify here to be our internal structure. This is as our internal structure. What is the last high? Sorry, the last high that caused this break. We call this impulsive move, and we started to do what? We started to pull back. But still, we are in a pull trend. This is where people get confusing. Still, we are in a pull trend until we get to this break. The moment we get an internal break, this internal break, it is confirmed that now we can expect the swing pullback. Let's see, first comes here when we move impulsive and we break this. This is a confirmation that we can expect the swing pullback into. Yeah, we can expect the swing pullback into Bahasi baby. But we don't expect this one to break. We don't, because there is a strong structure. So without this, so we expect this swing pullback. And when price comes into some of these areas, we will look forward to we wait for price to switch structure and for price to continue the move to the downside, so that we get impulsive correction and continuation, like how I already know now. The market is fractal. The market is fractal. So after a break of structure, we expect a swing pullback. After a break of structure, we expect a pullback. Then we have identified that here is our internal structure. Now where is our fractal structure? So the fractal structure is the smallest, the tiniest structures in all of the trade, and we confirm the internal pullback. So when we get a fractal break of structure, we confirm that the swing pullback has started, and we identify them by the tiniest structures in it. So when we get a structure, that's which break a structure, we have a fractal structure. So let's see, we have this impulsive move. All of these 5 candles break the candles low, and we had a pullback because it failed to break the candles low, and price continued. So just by looking at here, you can see that we have a fractal structure. The reason is here, the impulsive push to the upside, and you continue. So if you see something like this and you get a break, this is the confirmation. This is the confirmation that the internal pullback has started. After a break of internal structure, we are expecting an internal pullback. After a break of a swing structure, we are expecting a swing pullback. After a break of fractal structure, we are expecting a fractal pullback. It is as simple as that. It is as simple as that. And the moment, the more you try to complicate it, the more complicated it will become. Seriously, the more you try to complicate it, try to bring in this, try to bring in that blue, the more complicated it will become. Just how do I say? Just stick to the rules. Stick to the rules. Understand the framework that I'm teaching and stick to the rules. So we have this swing break of structure, internal break of structure. For this for this internal structure here, and we have a pullback here. So within here, automatically now you know that just by looking at this, you can classify where the M15 swing structure is. Automatically, this one will be the M15 swing structure. And another thing is, a run on the higher time frame is a trend on the higher time frame. So a run on a higher time frame is a trend on the lower time frame. Alright, so a run in the higher time frame is a trend in the lower time frame. What do I mean by a run in the higher time frame is a trend in the lower time frame? What do I mean by that? Now, when we are going to get into this, we are going to dive into multi-time frame market structure. And before we dive into multi-time frame market structure, we have to keep it in mind that we are continuing with the mapping process. We are building the narrative. Remember, this is just the narrative and the higher time frame. So we are building the narrative, and we are seeing that okay, the narrative is saying that are we in the pull trend or we are in the counter trend? Are we bullish or bearish? Where is the strong structure? Where is the internal and the fractal structure? We have identified this. We have identified that when we get a swing break of structure, that's the confirmation. When we get an internal break of structure, that's the confirmation that we are getting a swing pullback. When we get a fractal break of structure, it is a confirmation that we are getting an internal pullback. And we know that after a break of any structure, we are expecting a pullback. So these are some of the foundations, like the basic. Because if you have this, as a framework, whenever you come into the market, you can be able to read whatever is going on and decide, are you going to stay away, are you going to sell, or are you going to buy? So we are continuing, and I've already said you can only confirm that the swing pullback has started until we get here. We can only confirm that now we are getting the swing pullback. So what is next in the process is, okay, now we have identified where is within our internal structure. We have this fractal structure here. Now here's our fractal low, and these are fractal high. So fractal structure wise, we are within this range. Fractal structure wise, we are within this range. So since we are within this range here, these are fractal structure. So we have internal structure here, we have fractal structure here, and we have our swing structure. When we read this, we confirm that already we are in the swing pullback. Already we are in the swing pullback. When we read the fractal low, it will be a confirmation that the swing pullback has ended, and we expect the fractal pullback into here, and we continue to move because the swing pullback has ended, and we are continuing the true trend. When we break this, then we are continuing the same structure. So okay, this is what we are expecting. Already we are expecting this swing pullback, which means sooner or later, it doesn't necessarily mean that this low has to go. It doesn't necessarily mean that this high has to go, then you get a pullback from this. Because price can continue this move and break this and build strong liquidation and whatever for you before you get a pullback. And that's what I'm saying. You don't have to know whatever is going to happen next. You shouldn't even care about what is going to happen. You have to have your framework. Just have your framework. What are you going to use to read the market? And stick to it. So after this, we are expecting this swing pullback. Where are we expecting a swing pullback to? Where are we expecting them to at least come to? This is where we have this premium and discount pricing. So we are expecting price to at least pull back into here. This is where we call equilibrium. It is called equilibrium. And here is PM. PM means premium. And DS means discount. So we have discount pricing here. Anywhere within this range is discount pricing. Anywhere within this highs here is premium pricing. So here is the swing range, right? When price is at the highest here, or when price is within premium, it gives a signal to those who want to sell that the price is expensive, they can sell. Right? Imagine you bought here and you wanted to sell. When price is around this area, you like to sell, the price is expensive relative to the last row. So when you are selling from this highs here, this is when you are looking for shorts from this side here, there's high probability because you might be catching the next impulsive move. You might be catching this next impulsive move from here. Imagine, let's say you were able to get in and around here and get to this move and catch this impulsive move to the upside here. It is doable. It is perfectly doable. Like let's say when price build this, you start doing here and you got this price move. It is doable. You can do it. This is what you are building. This is what you are building towards. This is what you are building towards. But there is an analogy. When let's say you sold here, and prices tripling to the downside, and prices around this area, you like to take your profits, right? You like to buy back your order so that you'll be out and bank all those profits. Then you wait now you just wait for price to pull back for the year before. No, you are dealing with money. You are not going to do that. You are not. I don't want you to do that, bro. The emotional roller coaster you will go through. So this is the premium and discount pricing. This is the premium and discount pricing. And what you do with it gives us a perspective as to where what do you call it? It gives us a perspective as to where price is being turned around from, where the price is being turned around from. So in the process we are considering map your relevant supply and demand ranges or supply and demand zone. So here you can see with the internal structure. Here is our last supply range. Within the last supply range, here is our last zone that has been mitigated. So we map our relevant range. Then we have this fractal range here, right, which has been mitigated, and it is also part of a chain. So I am mapping relevant supply regions, also part of a chain. So you can see that this region demand is really holding. Demand has been holding. So it means there's a probability that you can continue the move to build this, because the fractal structure wise, here is a big fractal structure. We expect this one to get broken obviously. If this one doesn't and we build this, then we shall continue the move. But this is a fractal strong structure, and these are currents mean that prices within. We have two options. We can either wait, right, to gain clarity. We can either wait for price to either break this or break the highs, because we can't predict. There's no way we will know. But we know that here's a strong structure and we're the price break. But the more we put that into this structure, the higher the probability that this one will happen. But here's the case, this way nuance and everything comes in. We have already, we are trading, we want to, at least pull back to EQ before we start to look for sales. We are expecting the string range, but we cannot confirm. That's the reason why I said the earliest confirmation is this, because this one can still hold and we continue the move. Anything is possible. So we can either wait or we can get in with the idea that this one will fail and we are continuing the move. But that is for later. So we have another, we are mapping our relevant ranges, right? So let's see here, when price breaks this, we expect a pullback from here. This is kind of advanced. We don't have to draw all the way to the upside. No, it doesn't really matter. We are expecting price to come into some of these ranges. But if price breaks here, we can look forward to sell from this area because of the idea that this one will be let's continue. This one will be a liquidity, because in the next we have mapped relevant supply regions. Believe it or not, I have mapped relevant supply regions. So per se, map relevant liquidity sweeps and inducement points. So here now let's map liquidity sweeps. We have this ranges here, and before I mark the liquidity sweeps, I would like to elaborate a little bit on the ranges, why I identify those ranges, why I'm looking forward to trade from those ranges. And I would like to give you a really much credit, because I kind of went through it a little bit fast. Charlie, I kind of went through it a little bit faster, so let's slow it down. Now, how do we identify a valid range, a valid supply and demand range to trade from? The first characteristic or property of valid supply regions are structural zones. What I mean by structural zones is that the structure that breaks another structure. So when you get a structure that leads to a factor structure, it's a structural zone. So look at this. This here is a break, because all of these candles broke a candle's high. So we broke this a candle, we pulled back, and we continue the move. This means there's a structural zone because it led to a break. When this happens, we can look forward to identify, okay, where in the low that caused the break, right? Where in the low that caused the break, here the low that caused the break. Do we have a demand region on it? Where the range here? So you can see we have this boom buy move here. So here's the range, here is a weak range, and we have types of ranges as well. We have types of supply range. We have the fractal range, we have the single candle pivots, and we have the single candle pivot zones. We have the fractal zones, and we have the buy to sell zones. So the ranges. So here you can see that we have this range here, which is something like this, and price initiated out of the range. The aim we answer, we want to see a range, right? And we expect price to shoot out of the range, to break a structure, to break a structure, right? So that we will expect a pullback. When we get this short out of the range, this is what we call initiation. So we have a range, price will initiate out of the range, and we will pull back to mitigate the range. So this is a mitigation, and we get a continuation. So let me get it properly and try our best. Let's try if we can identify some on the chart. So what we are saying is we will have a range. Price will come into the range. Right, so we continue like this. This is the initiation. When price continues this move like this it is initiating out of the range. It is establishing its direction. It's initiating people into the zones, like it is initiating. So this is initiation. When we initiate out of the range, we will expect a pullback, or what we call mitigation. Right? So we expect mitigation. We expect mitigation into these ranges. When we get mitigation, when we get this mitigation and get a break, we expect this kind of pullback. We expect the next continuation. So what we are going to learn is range initiation, continuation, and what? Range initiation, mitigation, and continuation. just let's cast our mind here. We can see that we had a range here. This was our range. The price moved, we had this, and we initiated at the range. So now we establish this, which will be our base. Right? So when price initiate out of the range, it will be this. So when you are buying here, you know, you can be buying and buying, but you know that you are in the initiation range, you are in the initiation phase. You have to be quick and take profits, because price can turn around from any time anyway. So price came into the supply regime here, and we pulled back, which we call the mitigation. So we had the block of structure. Price continued to move until we had a valid supply regime, and we pulled back. So if you see me drawing this, it doesn't mean when price comes here you will be looking for sales. You can be looking for sales, but it doesn't mean that when price comes here it's supposed to turn around. It means it is a valid structure. It has inducement and whatever. Price can pull back massively from there as a form of initiation. When price, as a form of mitigation, to come into a middle mitigation and continue. So looking at this is what we get. Then this one will be the continuation. This one will be this. So we have a range, which is this. We have this initiation, which is this. We have this pullback, which is the mitigation here, and the next continuation, which is this. Let's look at structure whether we can identify another one. So let's see, we have this range here. Price initiated out of the range, and we have this pullback. Alright, so when we price initiated out of the range, this is the range. Right, this is the range, right? And price initiated out of the range, which means this is the initiation. This is the initiation. And what happened? We had our mitigation. Price came back to mitigate the range. What happened? We came back from a supply beginning to mitigate the range, and we continue the move. Which is it? Which is this continuation? So price continued this move. Am I clear? So this is the continuation. Now let's identify the last range and look at where price is, and just by range, initiation, mitigation, continuation, how can you take advantage of the moves? Now we can identify what to be our range. Right, this is the range. Price initiated out of the range. What is this initiation? Impulsive move. He impulsively initiated the range, and what happened? Price pulled back. Price pulled back. When price pulled back into the downside here, when price pulled back into the downside here, we are obviously this is what we call the initiation. This is the mitigation. As this is the initiation and this is the mitigation. What are we expecting? Simple. The next impulsive. We are expecting the next continuation move. Am I clear? So by this, let's analyze the market from this perspective and see. So we have this range here. So we have this range here. We have this massive range here. And we have initiation out of the range. Price initiated out of the range. So this is the initiation. That is the bearish form. So price initiated out of the range. And we have a pullback. This is the mitigation. This is the mitigation. We are pulling back into this. So we are within this. And price is at the extreme. What are we expecting? We are expecting the next continuation to align with this. That's what we are expecting. So yeah, I'm mapping the relevant supply regions, relevant demand regions, while I'm looking for it to sell from there. So internal is bearish, we have fractal pullback, we are expecting a continuation. This our internal structure. Until it breaks, we classify it to be a strong structure. It's how this inducement here, right? So we have inducement. This is a sweep. You see, here is a strong structure. We moved. Okay, I think I haven't finished with the supply and the demand region. I haven't finished yet. So any structure that led to a break is a structural zone, and that's why we classify them when we expect price to come into, and we expect a reaction or a continuation from those kind of zones. Right, cool. So a range, initiation, mitigation, and continuation is what we are looking for. Yeah. And again, another thing we have is a flip zone. So here is where we have this. We decided to get this pullback. After this one caused a break, we had this massive push to the upside, and we had a tap into the zone. When price tapped into the zone, we had a reaction. We were expecting price again, like we have a zone, we have a range, we have initiation, we have a pullback. What are we expecting? We are expecting a continuation, but in this case it didn't happen. We price pulled back and we broke the highs, which means the demand rating from the beginning of the reaction to the end of the reaction is what we call a flip zone. So this is the flip zone. Right, so you can go within this range from the beginning of the reaction to the end of the reaction. This is the range, but it's a flip zone. So from the beginning of the reaction to the end of the reaction is the flip zone. Here we have a supply region. Here it means I'm reading the 15 minutes on the 4 hour. Here is the supply region. Price moved into. We had a tap. We pulled back and we continue. So this is the reason why we can step in here and look for it to trade, because this is a flip zone. It is also it is also a structural zone. So any structure that looks big is a structural zone. It is valid. Another thing that we use to classify them to be a valid structure is what we call a flip zone. So here will be a failed reaction. Again, here when price came into this region, we were expecting this to bring the lows. But price started we came to this, we mitigated this, and we continue the move. We haven't broken this one yet, so we can't classify it to be a fail. If Ebanas is breaking above here, this one will be a fail. Anywhere within this range will be a range where we can look for it to trade. When price flip this, we are expecting a reaction. Let's see when we get something like this. This area will be our demand. So when price comes here, this is our range. We are expecting continuation. We are expecting this pullback. We are expecting continuation. But when in the case of flip, it means when price comes here, we will have a reaction. Price will be like it will continue, but it won't, and we break the lows. So from the beginning of the reaction to the end of the reaction becomes our flip zone. We can still have an unmitigated extreme and everything. We still have a flip zone, and the flip is much harder, right? Yeah. So that is for flip. Let me see. I can identify another flip zone. So let's see. Here is a demand region. So this is a demand region. Price key tapping to be pulled back and continue. So it means here is a flip zone. You can see the reason why price couldn't just break this straight away. See, price couldn't just break this straight away. Price tapped into, and we had a pullback, and we continue the move because this is a flip zone. So yeah, that is for flip zone. We are expecting this pullback and everything. this is the swing structure that we have identified, and we are saying that this, and we have this, it has sweep liquidity. Maybe this one can be used as inducement. On here, we're expecting this to go, or we're expecting the fractal structure to align with the internal. If the fractal structure continues to align with if the fractal structure continues bullish until we break this high, then it means the internal will switch bullish. Then we expect the pullback and we continue the move until we get into the premium of the price. Or if the switching there, the best are still looking for sales. So let's go to the medium time frame. Then medium time frame then. Let's go to the medium time frame then. Let's view the 10-15 swing range and the immediate buyers for today. Let's see how we go about it. Let's go. So okay, on the M15 we have already identified and established that the swing structure may obviously the mechanically another internal structure for the 4 hour. So here is our swing structure, here is our swing breakoff structure. This is the range that we are trading within. So maybe we can go to the phases. And we can let's go to the phases. Before we go to the phases the medium time frame here, what we are going to do is we are going to identify our immediate buyers plus our POIs that will fulfill the higher time frame objective. If we are able to identify your swing structure, your internal structures, fractal structures, your regions, the demand regions, supply regions, and everything, you repeat the process. I've already done that, and we are coming to go through the M15 again now. And the phases. So give me a minute. We'll go to the phases. And it will be great. It will be great. Actually. So the phases. Okay, let me close it. Let me close it. I don't think it has been an hour. I don't know how many and they record. I can't see the time. Can they see I will be you? Can't see the time. So we'll go to the phases. We'll go to the phases. We'll go to the phases. I want you to take this in for a while. This is different here. So this is what we are going to go through. So with the phases, we are going to look for phase A, which is the highest probable HP, the pre-trend and the pre-internal. When we are trading with the swing trend and we are trading with the internal trend, this is phase A. And phase B, when we are trading with the swing trend, but we are trading with the counter trend, we are trading against the internal trend. So pre-internal, counter swing, phase B is pro-swing counter-internal. Phase C is pro-internal counter-swing. It means we are trading against the swing structure, but we are trading with the internal structure. And phase D is counter-swing pro-internal, counter-swing counter-internal. It means we are trading against the internal structure, and we are also trading against the swing structure. So we already said that the highest probable ones are phase C and A. Phase C and A. These are the highest probable ones. Phase C and A. So phase C and A are the highest probable ones. Now let's look at this structure and identify where the phase A is, where the phase B is. So looking at this, we can clearly see that this one we got a break with another body close. So we had this move here, breaking this as a strong structure. So we had a strong liquidation, and we continue the move to the downside. We moved impulsively. We created a low, we built a low, meaning this is a strong structure, right? Cool. Now, what happened within our swing structure? Within this our swing structure, we had these internal structures within, right? These internal structures within. So here's our internal structure on the 15 minutes. So price moved impulsive, and we continue the move. When we broke above this, right? We broke above this. When price did what? Price pulled back. We continue the move to the upside. So when we break this, it is when we break the internal structure, here it is confirmed that now we are getting the swing pullback. But you can see here we have some complicated structure here. This one broke this, which means this one switched bearish, and we broke this. Continue switching sequence will continue, but I'll be clarifying here as one move, impulsive and corrective. But all of this move as one relative to this, so this one can be the corrective, and this one would have been the pullback, the continuation. But we continue the move. So the moment we broke this high, this our low, we had this our pullback here, created this our low. These are immediate bias, because these are the internal structures. So these are immediate bias, right? These are our immediate bias. So when we get this, it means we are trading within this range, and the internal structure is bullish, the swing structure is bearish. When we are trading in line with the swing structure, it is pro-trend, pro-swing, counter-internal. When we are trading with the internal structure like this, let's say we are buying this one or we are buying this one, it means we will be buying counter, we will be buying with the internal trend, but we will be against the counter trend. We will be against the swing trend, so we will be counter trend, counter internal, pro-swing, pro-swing, counter internal, which means it is phase C. Now, if we are looking forward to, let's say, buy from this area, it will be phase C, because we will be buying in the internal structure. Now we will be buying against the swing structure, which is bearish. We will be buying against the swing structure, which is bearish. So when price ever and it's not like freezing your bad, no. You need freeze is amount of where are you willing to using what. So for example, when price came here, I got this same move,
I got this one. I was taking out all but you see this move equally. And in the move we are just a pullback. I was just playing. We are still within this counter. We are still within this swing pullback bull. But what happened was, okay, I'm now waiting my thought process. Okay, when we have prices at the extreme, prices at the extreme. What I mean by the extreme is that here is the last demand rate, the last supply rating that we have. Yes, let us say a big ready. It is not relatively like we have another extreme here. We have another extreme here. But within this range, I don't think so definitely that. Let me confirm. Okay, so we didn't flip it do. Now flip it, you just bring this, you go through the structure. Okay. We just broke through the structure. So if price ever this zone, the price is here. Because now let me put this premium and discount to as well, so that you understand me. You can see that when I put this thing there, it shows that the price is well within premium. We traded past EQ. And now we are within premium. So if you are going to go, it is either we do it from this area or we do it from these ranges. If you are going to sell, we will do it from these two ranges. Right? If you are going to sell, we will do it from these ranges. So from the 4 hour, now what I'm doing is multi-type market analysis. From the 4 hour, you keep it in mind that this is the bullish, you are just playing the pullback. But where is our fractal structure? Here is the fractal structure. Price pulls impulsively. So when we tap into this ring and we broke this, although it wasn't everything, I was expecting price to come into here so that I'll play the pullback to at least or into this middle ranges. If I'm going to look for the buy from this, if I'm going to look for the buys from this, I'll look for buys from premium discount. Right? I'm not going to do it from, let's say here is the range that I'm looking for to buy from. I'm going to do it from the discount. Right? I'm not going to do it from where within the premium. This is EQ, this zone is at the EQ, but it has already been mitigated. That's the reason why I wasn't really willing to buy from the zone. Okay, so here with the thing, here with the range. Still, I'm expecting to say the price will go back to the lows though. I'm just the kind of thought process. So okay, I'll keep this. So as price about the M15, what we know is the M15 internal is bullish. So if I'm going to trade with the internal, I'll have to wait for this kind of ranges to be traded so that I'll look for the buys. This was supposed to be this is the main trade plan. This is the main trade, and if you are starting out, I will please start out from there. Pro-trend, counter internal. Don't do what I was doing because it was quite advanced. the reason why I'm saying it's a don't say you can feel, you can just feel. Small move can generate you correct opportunity, and you can make a fortune from just some small move. But no, if you are not prepared mentally, it won't be easy for you. If you are not prepared mentally, it won't be easy for you. So as you break okay now, so as you pass now, this is the internal structure. Here is my fractal structure, and the fractal structure is breaking, which means after break of the structure, I will expect a pullback into the structural zones. So that's the reason why I was looking for to do it from here. So I had this range, and I was expecting say that to use this as liquidity, as inducement. So I just waited for price to come into this range in the 1 minute, and I executed, and my target was around here. I got to collect opportunity here. I just came here, started to pull back, and then I hit my target and we pulled back. We came into this area. We changed a trend here in the 1 minute, and we pulled back, and I continued, and I got this one as well. I got in on the move here, and I was taken out by this. Price continued to drop. So like it is not about, if you are willing to lose more and try more of your luck, you can do what I was doing. But if you are not, and you are willing to play it conservatively, and which I advise you do, you wait for these kind of structures. So now you are not going to look for trades from this. Maybe here we are within premium. When price which is bullish here, see this one with the structure. When price which is bullish here, we can look for it to trade and target the highs. Maybe we are not going to target the extreme ground power. We can target at least 100 BB. And target this area from or the extreme, and you continue. So yeah, that is what my coming to conclusion. What I'm expecting is, if you break even and I be on strong liquidation, you can get the dive move, or we can just wait to wait for price to come into here so that we can trade from this area. So yeah, that's what I'm looking for, to continue the move, because if you break in here, that means the swing structure would have switched bearish, and now when we get a pullback, we can continue to trade the pro trend, pro internal, continue and targeting the lows. If it doesn't happen, we will be following the internal, maybe the immediate buyers. So we'll be following the internal structure to buy until the strong internal breaks. So this is what we are looking for, right? This is what we are looking for. And this phase is phase C, pro-internal, counter swing. Why we have these phases, and where we have to buy these kind of things, we'll get into much later, I think maybe tomorrow. So this afternoon. So, we will end here. Thank you.